This is your ultimate trading psychology guide where I'll go over everything you might need to improve your trading psychology, which is something every trader faces but not everyone talks about. Now, just to give you an idea about what we're going to cover on this video, all of those things. So you see, all of the trading psychology issues and problems traders faces, about 10 of them, including what is the problem, how to fix it, and why it happens, all of those things. So let's start. Now, first of all, trading psychology, what is it? It's the study of how traders' emotions and mental state affect their decision-making, behavior, and performance in the financial markets. A lot of people think that it's only about the technicals, it's only about learning the trading strategy or, the trading plan, indicators. But what a lot of people experience when entering their first trade, for example, is the trading psychology and how to fix it. It's all about money. That's why we have that psychology. Now we're going to cover everything about the trading psychology, the issue, why it happens, and how to fix it. We're going to go over 10 issues. But before that, a lot of people actually think that it's trading psychology that is stopping them from being profitable. However, it might not be. So psychology might not be your main problem. It's actually very common for traders just to attribute their losses to psychological factors and totally forget about the technical errors. And why is that? Now we have different reasons why this happens. But the first, and I would say the most common one, is the ego preservation. What does that mean? We're not blaming our technical errors, but blaming psychology because it's much easier to blame external factors other than focusing on the real reason why that happened. And another way to look at it is to avoid responsibility. So it's all about the ego. All I'm thinking about is that my ego is up. I'm not making mistakes. Actually, it's not about the technicals. I'm doing my best. However, it's my psychology that is stopping me and that is causing those losses. Now, another thing is actually how the industry, the whole Forex and trading industry, focuses on psychology. And you will think that it's actually not your mistake. You're not doing a mistake. You're not taking a wrong trade, but it's your psychology because the whole industry overemphasizes on the mental factors. And what does that lead to? Sometimes forgetting and ignoring everything about the technicals. And finally, the complexity of the market. A lot of people actually forget about how complex the market is, how random sometimes it is. So even if you follow your trading plan, even if you follow a trading strategy that is proven to have a high win rate, still you can lose. And that loss does not mean it's your psychology. It might be just part of that probability. So a lot of people forget about that and just blame the psychology. So those are some of the reasons that you might be actually doing, and it's proven that psychology is not your main problem. It might be technicals or it might be any other thing. But if it is your problem, then we're going to go over now the issues one by one, how to fix it, and why it happens, and what is it in the first place. So starting with the first one, and in my opinion, the most popular trading psychology issue, which is fear of missing out, also known as FOMO. Now, what is FOMO? It's the anxiety that others are making profit while you are not. And that leads to what? Impulsive trades. So just because you're thinking that actually people are making money, then that means I need to make money too. But that's not true, because we all following different trading plans, and when others are making money, it's okay for us not to make money. And that is driven by the human tendency to compare oneself to others and the fear of being left behind, because you're thinking that this might be the last opportunity that will ever happen. Now, how to fix this? We need to develop a solid trading plan and stick to it. So you have a checklist. When this happens, I would enter. Otherwise, I'm not involved. And I will not feel bad that it's the last trading opportunity, for example. Why? Because you got to remind yourself that the market offers endless opportunities, and missing one trade does not mean you've lost everything. I mean, the Forex market has $10 trillion of volume every day. So it's not going to be the last trade. And we need to focus on the long-term success rather than short-term gains. And now going over this second issue that people are facing when it comes to trading psychology, overtrading. What is overtrading? It's trading too frequently, often due to the need to cover losses quickly. So let's say you enter a trade and then you lose that trade. You immediately look for another opportunity, even if it doesn't fit your trading plan, just to cover and make up the losses that you have made, right? So it's just that you really want to enter a trade to make up the money. Now, why this happened? It's driven by the impatience, the desire for action, or the urge to compensate for losses. Now, in order to fix this, we need to have strict trading rules regarding the number of trades per day or per week. So let's say I'll have a rule that I'm only taking 3 trades a day. Even if I lose all of them, I'm not taking a 4th one to make up the losses. I'm done. And the next day I'll come back and I'll follow my trading plan. We also need to take breaks between trades and ensure that each trades align with the strategy that we're following. This way we'll be avoiding overtrading. The third issue is impatience, and this one, maybe it's going to be part of a lot of the issues that we're going to be covering today. So this is a very important one. Now, what is it? It's the inability to wait for the right setup, leading to entering or exiting trades too early. So you might be actually cutting losses early, or taking profits early, or not sticking to your stop loss or take profit, or going break even early. So all of those issues goes below the impatience. Now, why it happens? It's driven by the desire for immediate results or the fear of missing out on potential opportunities. And how to fix it? It's going to be by reminding yourself that good trades require time and proper setup. So it's okay for trades to take some time in order to hit the take profit. You also need to practice mindfulness techniques to stay calm and focused. The next one would be revenge trading. Actually, one of the most popular trading psychology issues that a lot of people face. And this one sometimes leads to losing the whole trading account and taking it to zero. Now, what is this problem? It's trying to win back losses by making aggressive trades without the proper analysis needed. Now, why it happens? It's an emotional responses to losses often lead to irrational decision making, fueled by the desire to recover quickly. It's just that you want to enter any trade just to make up the losses. And you might be in that cycle forever because you're not taking trades with the proper analysis. Now, how do we deal with that? Very simple. We recognize when emotions are driving your decision. So the moment that I think that I'm actually not following my analysis and my strategy, but in reality, it's all emotions that are making those decisions, then I need to step back and recognize that. We also need to take a step back after a loss, review the trading plan, and only re-enter the market with a clear strategy. Following the same trading plan, it's also okay, but not just taking a trade randomly without sticking to that trading plan. That's how we fix revenge trading. Next one is confirmation bias. It is focusing on information that confirms your existing beliefs while ignoring contradictory data. Actually, this is one of the most common trading psychology problems because the moment you enter a trade, you'll have, let's say it's a long position and price is reversing and going toward your stop loss. You'll have 1,000 reasons that is going to push up. You'll go to different time frames, find reasons just to convince yourself that is going to bounce up now. But it's not the reality. It's just that your mind is making up all of those reasons for price to go higher. It's convincing you. Now, why this happened? Because the brain naturally seeks out information that supports your pre-existing beliefs. So if you think that, I don't know, the sun is blue, if that's your belief, then what you're going to do is go Google that the sky is blue, other than looking at what the color is. You see, you're just trying to support your pre-existing belief instead of looking for the reality. How do we fix that? We need to actively seek out opposing viewpoints and consider them objectively. We also need to evaluate trades based on data and not emotions. We need to see what is following our real trading plan other than just trying to find something random to support our belief. into the next one. So the next one is the gambler's fallacy. And when I started trading, I was actually making these mistakes and I was following into this fallacy. Now, what is it? It's believing that past events affect the probabilities of future outcomes, leading to irrational decisions. Now, what does that mean in other words? So let's say we are taking a long position from a support level or a demand level or any POI, for example. Let's say we took that long. Price hit our stop loss. Because we are still in that demand and we hit our stop loss once, then we think that the probability now of price pushing higher is higher, right? So because we lost once, now the probability is on our side to win. And we're going to be keep longing from that POI for multiple times. The more we take stop losses, the more we think that now it's time to get a winning trade. That's the gambler's fallacy. Just thinking that price hit my stop loss once, twice, maybe 3 times, then that means the next one would be higher in probability. That's the gambler's fallacy. Why this happened? Because the human mind struggles with the concepts of randomness, leading to faulty assumptions about patterns, thinking that, oh, if I lose 3 times, then the 4th time will be a winner, for example. And that doesn't work, actually. The market is not about patterns. The market is very random in reality. Now, how do we fix that? We need to understand that each trade is an independent event with its own probability. So each trade is its own. We should never relate trades to others and thinking that the probability would be the same on other, for example. No, each trade is an independent one. Into the next one, and this is the sunk cost fallacy. And based on my trading experience, I've seen a lot of people falling into this one. Now, what is it? It's holding on to losing trades because of the time, money, or effort already invested. So let's say I already enter a Bitcoin buy and it's going lower, lower, lower. And even though I have a stop loss, that is, I would say, imaginary, for example, I say if price closes below that level, I would exit my trade. But then I think that, oh, I spent a lot of time into this trade. I spend money. I don't want to lose. So I would let it run lower and lower until it goes back. So I'm not sticking to my trading plan. I'm not sticking to my stop loss. I would let it go deeper into more lows because I don't want to lose the money, the time I invested, and all of the other things. Now, why this happened? Because the mind struggles to let go of losses, believing that more effort or time will turn the situation around. So just believing that, oh, if I allow more time, then price will reverse and go to my entry or my TP, when in reality, this is all emotions and it's not real. Now, how do we fix this? We need to focus on future potential, and we also need to set clear exit strategies and stick to them, regardless of past investments. If it's 1%, I need to stick to it. If it's 20%, I also need to stick to it. So I need to follow that clear exit strategy to the tick. That's what a sunk cost fallacy is. Now, the fear of pulling the trigger. Now, before going into what is it, let me tell you my experience based on this. What I used to be is a trader that knows how to analyze the market, knows how to find point of interest to enter from, but I was having this problem, which is the fear of pulling the trigger, the fear of taking action. So I had those POI, but I was never brave enough to enter of those POI, thinking that, oh, I might be losing. I don't want to enter this. I'm going to be looking for higher probability entry, even though that one was actually a higher probability, but it's because I have the fear of pulling the trigger. And what is that cause? Not taking trades. You just don't take trades because you are afraid. So what is it? Is the hesitation to enter a trade even when all conditions are in favor. So you have all of the checklist there. It's your high probability entry, but you don't want to enter. You cannot enter. You cannot take action. Now, why this happened? Because of the fear of failure or making the wrong decision, and that can paralyze the action. Now, how do we deal with this? We need to build confidence through practice and backtesting. That's one of the most important things. Backtesting will prevent that fear in the future. We also need to create a pre-trade checklist to confirm all conditions are met. And when all those conditions are met, then we need to take the trade, regardless of what we feel. That's going to make it easier for us to take action. Just remember that this one, the fear of pulling the trigger, is going to prevent you from making money in the market. Into the next one, and that is paralysis by analysis. Very common problem that a lot of people actually face. Now, what is it? It's overthinking and overanalyzing data to the point of inaction. Simply, I'll open the chart. I'm trying to look for a trading opportunity, but I cannot decide. What's the reason? I'm sitting on the chart, overthinking everything. Simply, I'll be looking for, bullish scenarios as well as bearish scenarios, and I'll keep overthinking that I'll have, 1,000 scenario. And can I decide on which one to take? Not really. And I would not be able to take any trade. Why this happen? Because of the fear of making the wrong decision. And that can lead to excessive information gathering, causing indecision. That's the paralysis by analysis. How do we deal with it? By simplifying your analysis process. So let's say I would start my day looking for this specific things. When I see it, I'll stop and I'll take actions based on that. We also need to set a time limit for analysis and create decision-making framework to always follow the same. Now, the last one is the perfectionism. Now, what is it? It's the desire to execute flawless trades. That's going to lead to what? Missed opportunities, because you're thinking that the market is perfect. A lot of people actually show images or diagrams of, for example, different POIs or different areas of supply or demand or any other thing, okay, order blocks. And they show you that price goes to that order block and immediately reverses and it goes exactly to that order block. Having that mindset, you'll think that the market is perfect. That's what's going to happen. When you go in reality, you go look at the chart, you will not see that type of trade. It's more complex and it's much harder. Now, why this happen? Why do we have this feeling? Because we have the pursuit of perfection, and that can create unrealistic expectation, causing hesitation as well as frustration. How do we deal with that? On the other hand, we accept that no trade is perfect and we should focus on overall performance rather than individual trades. We also need to set realistic goals and practice self-compassion. Those are the trading psychology problems that actually a lot of people have. We went over 10 of them. What is it? Why it happens and how to fix it. I really hope that this video help someone to become successful and profitable. That's all I care about, the good comments that I get. Try to go over each of those issues. See if you actually made a mistake in the past, you lost a trade because one of those issues. If you did, then make sure to review what you have done and follow the how to in order to fix it. That's it for today. If you like this video, then make sure to leave a comment, hit the like button, and share this video with your friends. You might be helping someone in need that is struggling with trading psychology. That's it, and I'll see you in the next video.